So you want to pull in a cool $2,500 every single month from the stock market in 2025, but you're probably thinking you need a portfolio the size of a small country to even get close. What if I told you that's the old school thinking and that this goal is way more achievable than you believe? For the last 5 years I've been obsessed with one thing, generating real spendable income from the market. In this video I'm going to show you exactly how to build a portfolio that hits the $2,500 a month target. We're not just going to use one strategy, we're using a powerful combo of dividend income and smart stock growth. I'll even give you clear real-world stock examples you can start researching the second this video ends. So forget the myth that you need $1 million, let's just build a realistic plan for 2025. So first off, let's get real about the numbers. Your goal is $2,500 a month, which works out to be $30,000 a year. The ancient advice you always hear is you just buy a bunch of dividend stock and live off the payout. Sounds nice, right? But let's do the math. A typical safe dividend yield from a portfolio of a solid blue chip stock is around 4%. To get $30,000 a year from that 4% yield, you'd need a nest egg of $750,000. For most of us, seeing a number like that is just discouraging. It feels like a finish line you can't even see. And that is the exact reason why so many people give up. They see the massive capital requirement and figure it's a game only for the super wealthy. But that's because they're only looking at half of the picture. They're stuck on the dividend yield. The secret isn't just the dividend, it's about building a total return machine where income flows from two places. Dividends, yes, but also from the growth of the stock themselves. This hybrid approach totally changes the game and makes the goal so much more attainable. Let's break down how to build this machine. Okay, so first up, building our foundation. This is where we bring in high quality dividend paying investments to provide a predictable, reliable stream of cash. These are our workhorses, but we're not just chasing the highest flashing yields, that's a common trap. We're looking for stability and a proven history of paying up. A fantastic way to get this done without the headache of picking individual stock is by using a dividend ETF or exchange traded fund. Just think of an ETF as a basket that holds dozens or even hundreds of different dividend stocks. Boom, you've got instant diversification. If one company in the fund has a rough quarter and cuts dividend, your entire income stream doesn't suddenly vanish. One of the most popular and respected dividend ETFs out there is Schwab US Dividend Equity. This fund is famous for zeroing in on financial strong companies that not only pay dividend but have a track record of growing them. It holds about 100 well-known stocks and is built for long-term sustainable income. For many income investors, this is a cornerstone. Another heavy hitter is the Vanguard High Dividend Yield ETF. This one tracks an index of companies expected to have above average dividend yields. With over 400 different stocks, it gives you incredible broad exposure to the market. A fund like VYM is perfect for casting a wide net and grabbing income from a huge range of established American companies. By putting a good chunk of your portfolio into a fund like SCHD or VYM, which tend to yield around 3 to 4%, we build that reliable bedrock. We know that quarter after quarter, this part of the portfolio is designed to send cash our way, forming the base of our 2,500 monthly goal. The part most people miss, the growth accelerator. If dividends are our steady foundation, growth stocks are the engine that gets us to the finish line faster. These are companies that might not pay a big dividend or any dividend at all because they're pumping every dollar they earn right back into the business to grow as fast as they can. You're probably asking, how does a stock that pays me nothing help me hit a monthly income goal? Well, simple, capital appreciation. When these stocks go up in value, that gain is real money. You can then strategically sell a small piece of your holding, a move called harvesting gains, to create your very own dividend. The beauty of this is you have total control over when and how much income you generate. For 2025, companies leading the charge is artificial intelligence and cloud computing continue to have massive growth potential. A name like Nvidia is still a beast, sitting at the heart of the AI boom with the GPUs that everyone wants. At the same time, Microsoft is a powerhouse growth story, not just for its software, but for its colossal expansion into cloud service with Azure and the brilliant way it's weaving AI tools like Copilot into everything it makes. In its fourth fiscal quarter of 2025, Microsoft's revenue jumped 18%, heavily driven by its cloud segment. These companies aren't about getting a 4% check in the mail, they're about turning a $10,000 investment into a $12,000 or $15,000 or more. That more is what you can turn into income. By combining our dividend foundation with a growth accelerator, we now have the two engines working for us. Consistent cash from the dividend and huge income potential from our growth gains. Alright, so a quick pause here. If you're finding this helpful and the light bulb is starting to go on, do me a huge favor and hit that like button right right now, it really helps the channel out and tells me you want more breakdowns just like this one. But this third pillar is for anyone who really want to put their portfolio into overdrive. It's a more active strategy, but it's one of the most effective ways to generate monthly income from stocks you already own. It's called selling covered calls. Now, I need to remind you, this is not financial advice, this is for educational purpose only. But now don't let the jargon scare you off. The concept is actually pretty simple. When you own at least 100 shares of a stock, you can essentially rent out those shares to other investors for a fee, which is called a premium. You get paid that premium right away, and it's yours to keep no matter what. It's a favorite strategy for investors looking to create a monthly paycheck from their holdings. And here's how it works. You sell a call option which gives someone the right but not the requirement to buy your 100 shares at a set price, the strike price, by a certain date. There are two great ways this can end. The stock price stays below your strike price, the option expires, worthless, you keep the cash premium you were paid, and you keep your 100 shares. Then you can just do it all over again next month. The stock price goes above the strike price, your shares get called away, meaning they're sold at a higher price, but you still keep the premium, and you locked in a profit from stock going up. There are even ETFs that do all the work for you, like the Global X Nasdaq 100 Covered Calls ETF. This fund owns the stocks in the Nasdaq 100 and automatically sells call options on them every single month to generate high income. It's a great hands-off way to use this strategy. By adding covered calls, you're layering on extra income on top of your dividend and capital gains, getting you that much closer to the $2,500 monthly target. Okay, so how does this all add up to $2,500 a month? Well, instead of needing that intimidating $750,000, you can now hit your goal with a much smaller portfolio. Let's imagine a portfolio of $400,000. You could put $200,000 into a dividend ETF like VYM. If it yields around 3%, that's $6,000 a year or $500 per month. Another $150,000 goes into your growth stocks. If this part of your portfolio grows by 10% in a year, a perfectly reasonable expectation for strong growth companies, that's $15,000 gain. Harvesting that gives you $1,250 per month. Finally, you could use the last $50,000 to buy shares of a solid company and sell covered calls on it. A conservative covered call strategy can often bring in an extra 5 to 10% yield per year. Let's call it 8%. That's another $4,000 a year or about $333 per month. Add it all up, $500 from dividends plus $1,250 from growth, $333 from covered calls, and it equals $2,083 per month. Look at that, we're already incredibly close to our goal with a portfolio that is nearly half the size of what the old school dividend only strategy would demand. A small bump in a portfolio size or slightly better returns from any of these pillars could easily push you past the $2,500 mark. Of course, no investment is a sure thing. Dividends can get cut and growth stocks can be a roller coaster. The market has its moods. That's exactly why we diversify. By not pumping all our eggs in one basket, by combining stable dividend payers, high potential growth stocks, and income boosting options, you build much more resilient portfolios that are designed to make money in all sorts of market conditions. That goal of earning $2,500 a month from the stock market in 2025 isn't some fantasy reserved for the ultra rich. That's a real target you can hit with a smart multi-layered strategy. So stop thinking you need $1 million, start thinking in terms of total return, build your dividend foundation for that steady cash flow, add a growth accelerator to create gains you can harvest, and if you're feeling it, use an income booster like covered calls to supercharge your monthly pay. The blueprint is right here, the examples are real and the math is clear. The next move is yours. And if you want to keep learning how to build real wealth and generate passive income, make sure you're subscribed to the channel. Thanks for watching and I'll see you guys in the next video.